Hey everybody, Boris Tasso, BK Force. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, May 29th through June 2nd, 2017. And the COM dollar complex is definitely picked up a lot of steam this week. Both the Aussie and the Kiwi have really increased their upside this week. The CAD, however, got really sideswiped by oil for most of the week, and then actually came back at the end of the week, but still looks to me the weakest of all the COM dollars, simply because I think the oil story seems to be more of a distribution story, and therefore dollar CAD is an upside story rather than a downside story. We'll take a look at the charts in just 1 second, but let's take a look at the calendar, and let me just filter out and get the commodity currencies on, and you'll see that there isn't really much on the calendar this week as far as the COM dollars goes. Actually very, very little of any merit. You basically have CAD GDP, which will be interesting to see. The market is looking for a bounce back, so this will be interesting to see if there's any strength here in Wednesday. A disappointing number here, I think, would only pressure the CAD for a rebound. It seems to have found, in my opinion, a relatively decent support at the 134 level, so it looks to be ready to make a turn. RBNZ probably going to try to talk the Kiwi down. It doesn't. Last few days actually have been sort of very negative for RBNZ because I don't want to see the Kiwi back up above 71. So it'll be interesting to see what they have to say. The story in Australia is really going to be the consumer. Retail sales, a lot of people are expecting retail sales to be very, very soft. As a matter of fact, if you look at the last couple of historical numbers, here's the retail sales. This is where the market expected them to be, and you see they've been underneath the expectations pretty much for the last 5 months. That suggests there's a sort of a thesis going on here, and you guys probably know better than I do, that the decline in the housing market in Australia is really starting to have a big impact on consumer spending. So it'll be interesting to see if this proves it, in which case the Aussie becomes a sort of a sell the rally trade, very much so. Then Friday, we against the non-farm payrolls, we have Canadian trade balance, which really isn't going to have much of an impact. So let's just take a look at the charts here and just see how everything sets up. First, starting with the Aussie. The odd definitely hit kind of a ceiling at the 75 level and came back down off of it. And of course, as I said, the retail sales, if those numbers prove to be soft, we can go right back underneath the 74s. So this counter trend anti-dollar rally that we've had for about 2 weeks, very, very small rally though. If you look at this, it's sort of a really low volatility rally from around, 73 to around 75. That's about all that you can get out of it. Still ended up below the 75-50 level, still continues to hold the lower highs structure in the Aussie, still basically suggests that you sell the rallies into this trade and look for potentially a retest of 73.50 as the week goes on. Let's take a look at the Kiwi next, and then I'll take a look at CAD. So Kiwi looks a lot healthier, and certainly sets up and has been setting up a much more interesting odd Kiwi cross, which we'll talk about in a few minutes. But Kiwi itself definitely found a very, very strong bottom off that 68 after the RBNZ tried to talk it down. And now, though, it is coming up against a very, very serious resist at the 71 level. The 71 and then 72, this whole 71-72 corridor really looks to me like a prime territory for Kiwi short. Not because there's anything fundamental on the headlines. It's just simply, I think technically it's going to be a very hard area for it to overcome unless we get a situation where the market gets super negative dollars. And a super negative dollar trade really does play to Kiwi's strength because of the yield differential. Kiwi is the highest yield in the industrialized world. So if the market feels like there is only 2 rate hikes out of the dollar, maybe even 1 rate hike, the worse U.S. yields get, the better this trade gets. So there is potential here, but I do think this whole 71-72 corridor becomes a much better place to start scaling up some shorts, because a lot of the move has already happened over here. And then finally, the weaker trade this week was the dollar CAD. Now, the dollar CAD had a very, very strong move all the way down to the 34s, but then it found pretty serious support here after the failure of oil to really take out the 50 post-OPEC. Now, oil rebounded today. It's traded right back towards the 50 level, but I think 50 is going to be a pretty serious resist. I don't think there's a lot of demand beyond 50 in oil, which means that there isn't a lot of demand for dollar CAD to the downside. It suggests that dollar CAD probably 34 holds, and if that does hold, then we have a chance to kind of ECAR way back up to 36. So overall, CAD looks the weakest. Dollar CAD looks the strongest, obviously. Odd dollar is going to be a very much consumer story this week, so very much worth watching. If that surprises to the downside, I think it could trigger a much more serious decline in the Aussie on the assumption that the consumer is really rolling over in Australia. And Kiwi remains a relative strength story amongst the calm dollars, but getting up into the very high levels where it could present some interesting tactical shorts at around 71 or higher. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.